99% of support and resistance traders make this mistake. They trade in the higher time frame support and resistance zone by selling into support or buying into resistance. I will show you exactly how I trade to avoid trading in these zones. This has drastically increased my win rate and reduced my trade holding duration. So by looking at this chart right now, most support and resistance traders, when you see that the euro is rising at this zone right here, when we see the euro is rising, most support and resistance traders will be looking to buy this up momentum, and most of them typically ignore the higher time frame. So that is the daily time frame. Now you can see exactly what happened right here when this price came back down to this EMA, or you can also call this a strong support and resistance level, because we're talking about support and resistance traders. So let's fast check. We have the first touch, the second one, and then we have the third one. So this is indeed a valid support and resistance zone, and most support and resistance traders will be looking to buy off this point. This trade is completely valid. This point right here, trading in that zone, is completely valid because it's an area of high interest and it's coming back to the EMA. But why did this trade fail? Why did it fail? Because most support and resistance traders, they'll be looking at this, they'll be looking at it like this. And when we go back down to the 1 hour time frame, we can see clearly that we have the pattern to enter. We indeed had the pattern to enter this zone, but what happened? Price stopped us out. And that is exactly why you should not be trading into the daily time frame zone. So what is the daily time frame zone? Let's remove this to be very clear. It is this zone right here. You can see this massive wick. We had this massive wick moving down to the 4H. You can see the moment we try to buy after this wick rejection right here, then we completely reversed. It is because we have reached a very strong level of support. The last time we were here was October 25th, and this is November 14th. So this area is highly respected. This is one of the mistakes many support and resistance traders make, is that they trade into the key zones of the daily time frame, or they totally ignore the higher time frame completely, and that is a very unorganized way of trading. You need to trade with what the larger investors are doing. If they are heading up, you need to go up with them because you don't have the capital to fight against them. So I have 3 rules that you would need to follow, that I follow when I'm trying to map out a zone. The first rule is map out the key support and resistance structure. And the second rule is to totally avoid the zone and do not trade in it. So let's follow the first rule. Let me demonstrate the first rule. So when we pop out the daily time frame, first we need to identify the trend. Any trader, by seeing this, we know that we are in a downtrend, because from here we transitioned into an uptrend, and then we broke this structure, this this higher low structure, creating a lower low, lower high, lower low, and then lower low, lower high. Then we are in a lower low. So we are indeed in a lower low. What I'm looking for is to map out this zone, this lower high zone. That is the most interesting zone in the market, because when that zone is broken, then we have a trend reversal. So this is our no trading zone. I call that NTZ, no trading zone. And this zone is 2 zones. First is our lower high, the current lower high structure, and then our lower low. So support and resistance, we need to know what the key support is and what the key resistance is. That is it. Now with this knowledge, moving down to the lower time frame, what I'm doing is that I'll completely ignore trading in this zone. When price hits this zone like it has done here, when this price rejects back to this 13 EMA, I'll be ignoring the trade, because this could be a rejection that the daily time frame is trying to play out from this strong level right here. And you can see how clearly on the 4H time frame we were able to have a clean sell. When price dips into the moving average, we had a sell, a clean sell, until we hit the next zone. So this mapping out our no trading areas also gives us an area of clean structure that nothing is going to stop the price from moving from point A to point B, because we have a clean structure. I totally ignored the zone because it wasn't a valid area. It wasn't a lower high or a lower low like we have right here. So that is the first rule. That is the first rule. The first rule is to map out the key support and resistance zone, which we just did here, which is the lower high and the lower low. And then rule 2 is to totally ignore that zone. It doesn't matter if we are heading into the zone or we are slightly above the zone. You should not be trading in an area of high interest, because those are strong key support and resistance zone. And then the last rule, which is often ignored, is to not trade close to the zone. If we're heading into the zone like we did here, like we were heading into this area right here, I'll not be looking to take this trade, because on the hourly time frame, when we go down to the hourly time frame, immediately we got that rejection from that EMA. You can see that if I had taken this trade right here, then my take profit will be below the zone. This is why I completely ignore trading into the zone, because right now if I had taken that trade, I'll be betting for price on the daily time frame to break the zone, but it did not. You can see how it's totally rejecting off of that zone, and this could be a potential loss. So those are the 3 rules that you need to follow to stay away from this zone. But the downside to this one is that you will indeed miss some setups. Some valid setups we have in these zones, you will miss them. But you're not in the market to cash every single move. You are there to cash the most high quality move that is more likely to move in your favor. So that is every single thing you have to do to be ahead of 99% of support and resistance traders. Now I'll be showing you examples of where this played off. You can see we indeed played off significantly well at this structure. When we rejected that zone, we came back and tested the EMA. I also used the EMA as an extra confirmation of liquidity. I'll be speaking on how I do that in the next video. So I use them as liquidity and also an extra confirmation to trade with the direction of the daily time frame. So this is the 13 EMA, and we can look at another example. Let's try another pair. Now this USD JPY. First, let's dissect the trend. So obviously we're in an uptrend, so going down to the 4H time frame, you can see immediately the price broke out of this no trading zone that we have right here on the daily time frame. This no trading zone, immediately we broke out this candle. Then on the 4H time frame, I took this trade. We had the rejection into the EMA. then I immediately took this trade from this point at this engulfing candle, targeting the 1 to 3 because I target a constant 1 to 3 risk to reward ratio, and this trade was an absolute banger. You can see how I entered this trade from this zone to the next no trading zone, which is around this area or maybe this area. So you can see the clean movement that I was talking about, the clean movement. Now let's jump to playback mode on a different software to test the system. So the first thing I'm looking to identify is the daily time frame trend. We will jump down to the daily time frame and then identify the trend. So obviously this was heading to the downside till we then broke out above this lower high right here. So let's map that out to make it clear. Immediately we broke this lower high, we transitioned into bullish. So where is our no trading zone? It should be right here because this now is the higher low. So where are we headed? Where is the next support and resistance? We are breaking above this structure. No, we broke above that structure, which means the next resistance is this zone. On the 4H time frame, I'm looking to trade once price rejects into this 13 EMA. So let's keep ahead. You can see immediately we hit that zone. A lot of noise. There was a lot of noise, a lot of things going on. Now immediately we break that zone. Immediately we break above this zone. Our next area of resistance is this zone right here, and now we are currently in that zone. We should delete that. Our higher low, once we move the high zone up, then our higher low needs to be moved, which means coming down from this zone, our next support is this area. But if you're not contented with this zone, then you can indeed use this area right here. So 2 areas. Remember, we are looking for buys. You see exactly why I say you should avoid this zone, because this rough business right here, when price came back to this moving average, it failed to push to the upside. It came back down. Now the sellers who don't know the trend is trying to sell, but indeed we are in an uptrend, so it kept heading to the downside. It came back again and the push failed again. Now we are below the EMA, but we are looking to buy, not sell, and we are back into this area. Now we are bearish. We are below the daily 13 EMA. I don't actually use that, but I only use the 13 EMA on the 4H, and we are below the zone. We have broken below the zone, which means our next zone is this zone over here, and now we are bearish. So where is our resistance zone? It is this zone. Now until we break above this zone, we are still bearish. On the 4-hour time frame, what we are waiting for is the price to dip back into that EMA. We came back into this EMA, but it is inside the zone. We are not looking to sell. As you can see that immediately we came back into this zone, the sell did not work. It is because we are in that zone, and you can see all this mess. Now we are indeed bullish again. No, not bullish yet until we break that structure, because we did in fact clear this low. So let's start skipping. Now we have broken that structure. Which area is where is our next resistance? It is this zone right here. We remove this guy. Now on the 4H, you can see the price did come back into this zone, and I don't trade the EMA alone. I trade it with areas of interest with a minimum of 3 touches. This is back in October. When is this? April. That is greater than 6 months. We can't go back more than 6 months, which means this area only has two touches. I am not trading in that zone. And that is one more confluence that I'm going to explain in my next video. You can see, because we don't have enough power to support this structure right here, we dipped back significantly into the moving average, and now it looks as if we are ranging, but we're not. We came back again. We have no business trading that. And on the daily time frame, let's skip. Now we are above. Being above that, you can see exactly how peaky this no trading zone can make you be in some trades you take, exactly how selective a system like this can make you be in some positions you take, because indeed, as a trader, you should not trade everything you see in the market. You should trade only the high quality setup, and that is exactly what this system is trying to make you to do. So we are hitting an area, a no trading zone area on the daily time frame. Let's make this a little bit more clear. Let's remove all these ones. We're just looking to catch one good trade to prove this example. It is that zone. Now we are back. We came back on the 4-hour time frame. You can see exactly how we dipped back into this EMA and then pushed to the upside. You could take this trade, but you do in fact need to know that you are buying into a very powerful zone, and that is like breaking rule 3. You can see immediately we hit that, we indeed turned into bearish. Now immediately we broke this structure. For those of you who know how pattern works, immediately we create a shoulder, head, and a right shoulder. Where is the head and shoulders pattern? Right here. You can see shoulder, the head, and then the right shoulder. We had the breakout and then the retest, which means we are now bearish on the daily time frame. Immediately we broke out of this zone, we are bearish. So where is the next support? Because we are heading to support. The next support is around this area. Now that we know that we are bearish because this daily candle closed, we are waiting for the test of that EMA. Now we are having the test of that EMA. I typically jump down to the 4-hour time frame to look for entry, but first of all we need to find an area of interest. Now this area of interest has 3 touches. The first touch, we have the first touch, the second, and the third touch. We can also count this as a 4th touch. So we see that we have a very strong area of support and resistance, which is the first confluence, this zone right here. And then we are dipping back into the EMA. We are trading with the direction of the daily time frame, and then on the 1 hour we have this bearish evening star, and also an engulfing bearish candle. What I'll do is I'll enter at this structure, and of course this is a free software. I'm going to link this free software in the description below so you can get it for free. You can backtest like you're trading in the live market. And of course we move this, you can see we hit take profit. So that is the power of using this no trading zone. It will make you avoid trading unreasonably by avoiding trades and losses that you would have taken by trading in this very powerful zones on the daily time frame. So that is it for this video. Going back to the rules, you need to make sure that you can identify and map out a key support and resistance structure, avoid the zone, and do not sell close to the zone. Those 3 rules will keep you from harm. And with that said, as always, I'll be seeing you on the next one. Peace out, everybody.